Hello, it's John from Currencies. This is our 336th review, and the theme of this week's reviews was different time frames, what's working in the market, and how we need to be aware of the different chart configurations, time frames, etc., and what is actually moving, not moving in the markets. I'm going to review a few of the pairs this week with regards to 240 chart settings. And something of interest that you'll find is that the pairs that we reviewed, and there's quite a few that I'll show here very shortly, all do very well from the beginning of the year till now. But there are times in the market when the 240s are not working, and usually that's in heightened volatility. If you move to a different time frame, i.e. 15-minute charts, you'll find that in that heightened time of volatility where the 240s are not working, the 15-minute charts are doing exceptionally well, more reactive, making a lot more pips. Obviously, during that period of time when we're in a choppy market, the 240s don't necessarily produce a lot of pips. Usually get us into a drawdown situation during those heightened volatile times. And we've always talked about when those things are not, when those charts are not producing pips, that we need to move to different time frames and go after the pips when we get it. Example being this year in April through basically October, maybe September, October on the euro dollar, we'll see that during that 5-month period of time, the 15-minute charts did exceptionally well. A lot of trades, a lot of pips, good profit loss, good profit factors, etc. The rest of the year, as far as the 240s have gone, the other 6 months of the year, the 240s did exceptionally well. And I'm going to show you some of that right now. A couple things of interest here is our cumulative profit. This is on the euro dollar 240 chart using all of our standard settings. About a 26.5% winning percentage. You see here 1 through 11, 55% winning percentage, 98 trades, all good stuff. When we talk about amount pips gained, 3,319 pips. Average winning trade 145, average losing trade 102, average win to loss ratio 1.4, all good numbers. When I was talking about, here's a cumulative profit graph, when I was talking about from April in this section through August, September, in through this period, we're kind of flat. This was a highly choppy market, a lot of stuff, a lot of news going on, European debt situations, etc. And then we see that the euro, as far as our 240 dots, and have been going up very nicely in through this section here. So during this particular period of time, the 15-minute charts did extremely well. Showing our graph of the euro dollar, this is 15-minute chart. You see that we have a nice movement up in profitability. And this is on the 15-minute chart where we had a very flat line through this period of time. This is the entire period from 4/1 through 8/24. So for 4.5 months, right through here, we have a nice steady climb in our profitability. So moving from the 4-hour down to the 15-minute in this particular time frame would have increased our profitability, by another 7-8%. So we would have been in the 34-35% winning or cumulative profit, by moving into the lower time frames during this more volatile time. Here we look at the Euro Swiss franc. We had about 82 trades, 53% winning percentage. Average winning trade 167, average losing trade 86, about a 1.94 ratio average to losing trade, very nice there. 3,810 pips cumulative profit, all nice stuff. Returning us about 39, almost 40% for the year on this particular. But as you'll see on the chart here, as you see on the graph, first part of the year has all been pretty much flat to break even. We started increasing a bit in July, August, September, started moving up into where we're at right now. So this particular period of time, probably the first 6 months of the year, was not a very good trading on the 240 chart. But again, if we move down into different time frames, maybe even different chart configurations, we can certainly increase our profitability from the 39%, which isn't too bad. But from a psychological standpoint, I would think that the majority of us in this first 6 months of the year may have given up and then lost this huge run up, okay, in fear that the system is not working, that it's not doing what it's supposed to do. But yet, if to date we would have taken all the trades and done what we're supposed to do and we're taught to do, we'd be up about 40% in our account right now. That just comes with knowing why the system is doing what it's doing. Again, relating back to what I wrote in the weekly review here, is knowing why the system is giving us dots or not, or breakouts or whatever. And if you don't know why it's not, why it's giving us those signals, then you're not going to know that in these periods of time that you need to move on and look at different time frames in order to have maybe a smoother equity curve. And here we have the pound dollar for the year. We have approximately 86 trades, working nicely through September, then starting to come down. And if we take a look at here, we could have increased by moving down in time frames. Some of our profitability helped to offset some of this downtrend here. Only the pound dollar for the year up about 3% if trading all 86 trades. Reason, no follow through on the pound. Not really reacting very well. If you look at from the start of the year in January through now, you have about a 11 or 1200 pip movement from peak to valley, but a lot of choppiness, as we can tell by this graph right here. A lot of choppiness and no real follow through. And here's the dollar Swiss franc, same 11 months. We have a 76 trades, about a 40% winning percentage. Some people would be afraid of that, but I'm not. Average winning trade 151, average losing trade about 82 pips. So that's all not too bad. You kind of wonder why we had actually 735 pips of profit for the year. Graph here again through this period of time, April through September, October, October starting to go up, etc. Through this period of time here, we had a lot of drawdown on the 240s. And here's utilizing the 15-minute chart during that period of time. We see that we were a little bit above the break-even line for the majority of the time here, which would have helped smooth out some of our drawdown on the 240 charts. And here's the pound yen. 43% winning percentage. Average winning trade 155, losing trade 101 for a 1.54 winning average winning to loss ratio. Good stuff there. Here's the Aussie dollar, 87 trades, percent profitable about 53%. Average winning trade 108, losing trade 81, 1.33. 1,632 pips net for the year so far. And here is a cumulative profit, and nice trade, about 16%, starting at the beginning of the year. Had a small drawdown in through here, and it has continued up from there. And here's the Aussie yen, about 50% winning percentage, 10%, almost 11 for the year. 833 pips total for the year. Average win 97, average loss 74. Good numbers. Okay, so basically, hope that you found this rather interesting. Don't always look to just one particular time frame, chart configuration, etc. Be knowledgeable of what's going on in the market, and see how the trends are developing, whether there's trends developing or whether we're in a choppy market and needing to move down in different time frames. Don't have just particular tunnel vision on one particular pair or time frame, because what you'll find is that we go through times where the system may not be profitable during that particular market type, and we need to understand that and move to other time frames or charts that are yielding us better risk reward. Okay, this is John from Currencies. Have a good week. Talk to you next week.